So today I want to talk about something that most people are completely missing about this war. Everyone is watching the headlines. Everyone is following the strikes, the counteroffensives, the emergency summits, the sanctions packages, the weapons shipments. The mainstream coverage gives you all of it. Who gained what? Who lost what? Which diplomat said which carefully worded statement? But almost nobody is asking the question that actually matters most to ordinary people around the world. Not who wins this war, not even how long it lasts. The question that matters is this: what happens to the global system itself if this war simply continues, not escalates? Not ends, just continues, because the answer, when you look at it carefully, is deeply alarming. The global system, the network of energy supply, food trade, financial markets, and military alliances that holds modern life together was not built to survive a prolonged war of this scale and complexity. It was built for crises that end, not for crises that don't. Every month this war continues, the system absorbs another shock. And systems don't absorb shocks indefinitely. At some point, they don't bend any further. They break. And when a global system breaks, it is not governments or militaries that feel it first. It is ordinary people. Your job, your food, your energy bill, your savings, your future. If this analysis is the kind that helps you understand what is actually happening in the world, please take a moment right now to like this video and subscribe to the channel. It genuinely makes a difference. So today I want to walk you through exactly what a prolonged war does to every major part of the global system. Country by country, institution by institution, breaking point by breaking point. So let us begin. Here is the foundation of everything I'm going to tell you today. The global system as we know it, the arrangement of trade, energy, finance, and security that has governed life for the past 75 years, was designed after the Second World War with one core assumption, built in. The assumption is that conflicts are temporary. They begin, they escalate, they end. And the system was engineered with enough redundancy, enough diplomatic machinery, and enough institutional resilience to absorb the shocks of conflicts that end. What the architects of that system did not design for is a war that doesn't end. A war that becomes permanent background noise. A war that every other nation has to work around month after month, year after year, while simultaneously managing their own economic pressures, their own political instability, and their own internal crises. The question is no longer whether this war is damaging the global system. It is, and every serious economist, every energy analyst, every food security expert will tell you that the question is which parts of the system are closest to their breaking point, and what happens to ordinary people when those parts give way. The answer to that question depends entirely on one thing: how deeply integrated is each part of the global system with the stresses this war is generating. The more integrated through energy dependency, financial exposure, food import reliance, or military commitment, the closer to breaking, the less integrated, the more time remains to adapt before the break arrives. Let me walk you through every major player in that framework. Because every country I'm about to describe is either already at a breaking point, approaching one, or sitting in the rare position of having enough structural independence to survive. What is coming? Let me show you which is which. On the surface, Europe looks like it has managed the war's economic impact reasonably well. Energy supplies were rerouted after Russian gas was cut off. Recession was avoided in most major economies. NATO remained unified. European governments kept their populations on board, at least politically. But underneath that surface, Europe is absorbing a prolonged economic drain that its political systems are increasingly unable to sustain. Germany, the largest economy in Europe, the industrial engine of the continent, contracted for the second consecutive year in 2024. Industrial energy costs in Germany are now 3 to 4 times higher than in the United States. German manufacturers are not adapting. They are leaving. BASF, Volkswagen, ThyssenKrupp companies that are the backbone of European industrial civilization are all cutting operations in Europe and investing elsewhere. Here is the consequence chain. German industry shrinks, tax revenues fall, government deficits rise, pressure on social services intensifies, political discontent grows. And political discontent in Europe, when it grows under economic pressure, historically does not produce moderate outcomes. The parties gaining ground across Germany, France, Italy, the Netherlands, and Austria are the ones promising to end the war, cut aid to Ukraine, and put national economic interests first, regardless of the geopolitical consequences. For ordinary European families, this means a very specific and personal reality. High energy costs that are no longer temporary, declining real wages, and governments that are running out of the fiscal space to cushion the impact. A war that continues another 2 or 3 years may not destroy Europe militarily, but it may destroy the political consensus that has held European institutions together since 1945. Now let us look at the nation whose economic model is being most structurally disrupted by a prolonged war. On the surface, China continues to project economic strength. Its manufacturing output remains enormous. Its global trade share is growing. Its leadership presents a picture of confident stability while the Western world struggles. But underneath that surface, China's economic engine is running into structural problems that a prolonged war is making significantly worse. China's entire model is built on 2 pillars: cheap energy in, manufactured goods out. Import low-cost energy from the Gulf, use it to power factories, export finished goods to Western consumers, repeat at scale. A war that continues and keeps Gulf energy expensive and unreliable attacks the first pillar directly. China imports approximately 40% of its total energy from Gulf suppliers. Every dollar added to the oil price costs China's industrial sector tens of billions annually in additional input costs. Costs that either get absorbed into lower margins or passed on through prices that make Chinese exports less competitive. But here is the second pillar problem that most analysis misses. Western consumers, particularly in the United States and Europe, are under economic stress from the war's inflationary effects. Stressed consumers buy less. When Western consumers buy less, Chinese factories produce less. When Chinese factories produce less, Chinese workers earn less. When Chinese workers earn less, domestic consumption, already weak, with household savings rates running at historic highs because ordinary Chinese families are deeply uncertain about their economic futures, falls further still. This is the trap. China cannot easily pivot to domestic demand because its consumers are cautious. It cannot easily reduce energy dependency because alternatives take decades to build. And it cannot easily break into new export markets fast enough to replace slowing Western demand. For ordinary Chinese families, prolonged war means continued youth unemployment, which peaked above 20% in urban areas, and an economic anxiety that no amount of official confidence statistics can paper over. Now let us look at the country that most people assume is insulated from all of this and is not. On the surface, America looks like the most protected major economy in a prolonged war scenario. It has domestic energy production that covers the vast majority of its needs. It has the world's reserve currency. It has geographic distance from both the European and Middle Eastern conflict zones. And it has an economy that, on headline measures, has continued to grow even as others have struggled. But underneath that surface, a prolonged war is doing something to America's fiscal position that most ordinary Americans are not yet focused on, but will be. America is currently carrying $36 trillion in national debt, and that debt is serviceable just at current interest rates, but the war has contributed to the inflationary pressures that forced interest rates higher. Higher interest rates mean higher debt service costs. The United States now spends more each year on interest payments on its national debt than it spends on its entire defense budget. More than $1 trillion a year flowing out of the public accounts In interest payments alone, a prolonged war means continued pressure to spend more on defense, more on allied support, more on the energy transition that the war has accelerated. Every dollar of additional spending in a high interest rate environment costs more to finance. The compound effect of prolonged war on American public finances is not catastrophic in the short term, but it is cumulative. And cumulative fiscal pressure, sustained over years, changes the set of choices available to every future American government. For ordinary American families, the most immediate effect of a prolonged war is continued inflation pressure, particularly in energy and food, and the slow erosion of public services as fiscal space contracts. America's resource wealth is real, and its advantages are genuine. But even genuine advantages have limits when the drain runs long enough. Now let us look at the system that sits at the absolute center of global economic stability and is closest to its breaking point. On the surface, global food markets look like they have stabilized after the initial shocks of 2022. Grain prices have come off their peaks. Famine declarations have not materialized across the scale that was feared. The worst-case scenarios, it seems, were avoided. But underneath that surface, the global food system is operating with almost no margin for error. And a war that continues is systematically stripping away what little margin remains. Here is the specific number that explains the risk. Russia and Ukraine together account for approximately 30% of global wheat exports and 65% of global sunflower oil exports. Not some of it, not a significant share. Nearly a third of the wheat that feeds the world, and nearly two-thirds of a critical cooking oil, comes from an active war zone. Every month this war continues is another month. That production uncertainty, shipping disruption, and sanctions complexity keep those supply chains under stress. The second layer of risk is fertilizer. Modern agricultural production is dependent on nitrogen fertilizer, which is manufactured using natural gas as its primary input. Russia is one of the world's largest exporters of fertilizer. Sanctions, logistics disruption, and energy price volatility have all made fertilizer more expensive and less accessible for the farmers, particularly in South Asia and Sub-Saharan Africa, who need it most to feed their populations. The consequence chain runs like this. Fertilizer becomes expensive, farmers use less, yields fall, local food prices rise, governments in low-income nations face fiscal pressure to subsidize food that they cannot afford. When they cannot afford it, they stop subsidizing. When subsidies stop, food becomes unaffordable for the families at the bottom of the income distribution, and when food becomes unaffordable at the bottom, the political and social consequences are not gradual, they are sudden. For ordinary families across Sub-Saharan Africa and South Asia, people who are already spending 50 to 70% of their income on food, a prolonged war is not a distant geopolitical concern. It is the price on the shelf at the market. It is whether there is food on the table tonight. Now let us look at the financial system that is supposed to hold all of this together. On the surface, global financial markets have been remarkably resilient throughout this conflict. Stock markets in Western nations have, broadly speaking, continued to perform. The dollar has remained strong, banking systems have not collapsed, and the financial architecture that was supposed to hold appears to be holding. But underneath that surface, the global financial system is fracturing. Not dramatically, not visibly, but structurally, and in ways that become increasingly difficult to reverse the longer the war continues. The fracture is geopolitical. When Western nations froze approximately $300 billion in Russian sovereign assets at the start of the conflict, every non-Western government on Earth took notice. The message was clear. Holding your reserves in Western currencies, in Western financial institutions, means those reserves can be weaponized against you if your government falls on the wrong side of a geopolitical dispute. That is not a message that non-Western governments forget. The response has been gradual but consistent. Central banks across Asia, the Middle East, Africa, and Latin America have been quietly reducing their dollar reserve holdings and increasing gold purchases, which reached record levels in 2023 and 2024. Trade agreements between non-Western nations and non-dollar currencies are multiplying. The BRICS grouping, Brazil, Russia, India, China, South Africa, and now several others, is actively developing alternative payment infrastructure that bypasses Western financial systems. None of this is an immediate crisis for the dollar or for Western financial dominance, but a prolonged war accelerates every one of these trends. The dollar's status as the world's reserve currency is not guaranteed by physics. It is maintained by trust, by convenience, and by the absence of a credible alternative. Each year of prolonged war erodes the trust and advances the alternatives. For ordinary Americans and Europeans, the long-term consequence is a world in which Western financial power has less reach, and therefore Western governments have fewer tools to manage global crises of every kind. Now let us look at the actor that sits at the intersection of every system I have just described. On the surface, the Gulf states, Saudi Arabia, the UAE, Qatar, Kuwait, look like the unexpected winners of a prolonged war. High oil prices mean high revenues. Their strategic importance has never been greater. Every major power is courting them simultaneously. They have never had more diplomatic leverage. But underneath that surface, the Gulf states are sitting at a pivot point that a prolonged war is making increasingly unstable, and a shift in their position would send shockwaves through every system I've described. The Gulf states have for decades operated under an implicit arrangement. They sell their oil in US dollars, invest the proceeds in Western financial markets, and in return receive American military protection and integration into the Western-led global order. That arrangement, the petrodollar system, is the linchpin of American financial power, the mechanism that creates global demand for the US dollar and allows America to borrow at the scale its debt requires. A prolonged war is forcing the Gulf states to choose sides in ways that the old arrangement was designed to avoid. China is now their largest customer for oil. Russia is their OPEC Plus partner. America is asking them to maintain production levels and support sanctions regimes that conflict with their own economic interests. They are being pulled in three directions simultaneously. If the Gulf states, or even one of them, make a decisive pivot away from the dollar system, the ripple effects travel through every other system at once. American borrowing costs rise, dollar dominance weakens. The financial architecture that has sustained Western economic policy for 50 years comes under its most serious stress since Bretton Woods. For ordinary people everywhere, this is not an abstract currency debate. It is the mechanism to which American fiscal capacity and therefore American ability to lead the global response to crises of every kind either holds or doesn't. So now let us zoom out and look at the biggest picture of all. What every story I just told you has in common is this. Each system, European political consensus, China's export engine, American fiscal stability, global food supply, global financial architecture, Gulf state alignment was calibrated for a world in which major conflicts end within a predictable time frame. They all have buffers. They all have redundancy. But none of them have infinite resilience. And a prolonged war is the one scenario that tests them all simultaneously, continuously, without relief. The grand pattern is not that this war will destroy any one of these systems in a single dramatic moment. It is that this war, if it continues, will gradually push each system toward its structural limit. And when systems reach their structural limits, at the same time, the failure of one accelerates the failure of the others. That is what systemic collapse looks like, not one explosion, a cascade. And here is the crucial insight that most people are completely missing. The global system does not send clear warning signals before it breaks. It sends subtle ones. German industrial retreat, quiet dollar reserve diversification, fertilizer price spikes in markets nobody in the West is watching, erosion of political consensus in countries that seem stable. These are the signals. They are happening right now. And the question is not whether the people who need to act are seeing them. The question is whether they are acting on what they see quickly enough to matter. History is unambiguous on this point. The systems that held the 20th century together, the gold standard, the British Empire's trade network, the interwar financial architecture, all showed the same pattern before they broke. Visible stress, gradual erosion, policymaker inaction justified by the assumption that the system would hold, and then sudden failure that nobody was prepared for despite all the warning. The nations and individuals that navigate what comes next are the ones that read the subtle signals clearly, act before the cascade begins, and build enough structural independence to survive the moment when the system stops, absorbing shocks and starts transmitting them. I want to end with the most surprising conclusion of this entire analysis, because you might expect me to say that the answer to everything I've described, the way to survive a global system under prolonged stress, is military power or financial reserves or diplomatic influence. And all of those things help, but they are not the answer. But actually, no, the entity that survives prolonged systemic stress most reliably is not the most powerful one. It is the most legible one. Let me explain what I mean. A nation or an institution or an economy is legible when the people inside it can read what is happening clearly, communicate it honestly, and make decisions based on accurate information rather than wishful thinking. Legibility means a government that tells its citizens the truth about what a prolonged war is, costing rather than hiding the cost until it becomes a crisis. It means a central bank that acts on the data it sees rather than the data it wishes it were seeing. It means a business that reads the supply chain signals early and restructures before it is forced to. The countries that are going to navigate the prolonged stress of this war most successfully are not the ones with the most missiles or the most money. They are the ones where the gap between what is actually happening and what the institutions say is happening is smallest. Because that gap between reality and the official version of reality is where systemic failures incubate. They grow in the dark, in the space between what people know and what they are told. And they emerge suddenly at the worst possible moment as a crisis that everyone says came from nowhere. It did not come from nowhere. It came from the gap. That is not a comfortable observation for any government, any institution, or any nation to sit with. But it is the lesson that every major systemic failure of the past century teaches consistently and without exception. The nations that tell themselves the truth about what a prolonged war is doing to their systems and act on that truth while they still have time are the nations that survive it. That is not pessimism. And that is the most important form of preparation available. So let us just recap what we covered today. Europe is absorbing a prolonged economic drain that is eroding the industrial base of its largest economies and the political consensus that holds its institutions together. Germany's industrial contraction is the leading indicator. Watch. China's export-driven economic model is being squeezed from both sides simultaneously by rising energy costs on the input side and by weakening Western consumer demand on the output side. Its domestic pivot is not moving fast enough to compensate. America's fiscal position is being quietly but cumulatively stressed by high interest rates on a $36 trillion debt load in an environment where war-related spending pressure continues. Its resource advantages are real, but not unlimited. The global food system is operating with almost no margin for error. With 30% of global wheat exports coming from an active war zone and fertilizer costs elevated across the developing world, the system is one bad harvest season away from a humanitarian crisis of significant scale. The global financial system is fracturing along geopolitical lines, with non-Western nations quietly diversifying away from dollar reserves and building alternative payment infrastructure, a trend that a prolonged war accelerates every month. Continues, the Gulf states are at a pivot point. Their continued alignment with the dollar system is less certain than it has ever been, and a shift in their position would transmit stress across every other system simultaneously. And the overarching lesson is this: The global system was built to absorb temporary shocks. It was not built for a war without an end in sight. Every month of continuation brings each of its major components closer to the structural limit that, when reached simultaneously, produces not a single dramatic collapse, but a cascade of failures, each one accelerating the next. This war is not just a military conflict. It is the longest-running stress test the post-war global system has ever faced. The question is not whether the system will be changed by it. It already has been. The question is whether what replaces it is built with more wisdom than what came before. If this gave you a clearer picture of what a prolonged war actually means for the systems that hold your world together, please like this video and subscribe to the channel. We explain geopolitics and global economics in simple English so that ordinary people have access to the same quality of analysis that used to live only in policy rooms and boardrooms. And I want to know what you think in the comments. Which part of the global system do you believe is closest to its breaking point? The financial system, the food system, or the European political consensus? Tell me below. I read every comment. I will see you next time.